Well, this story has certainly been like a movie from the very start. And now FTX customers are suing the crypto exchange in a bid to claim ownership of the remaining digital assets holdings. So a lawsuit representing more than 1 million customers alleges the now bankrupt FTX failed to segregate customer accounts, and therefore those customers should be repaid before the other creditors. Now, the lawsuit comes as FTX founder Sam Bankman-Fried faces allegations of misappropriating customer money to fund some risky bets made by sister fund Alameda Research. And we've recently learned one of those wagers includes a $546 million loan from Alameda that Bankman-Fried used to buy his stake in fintech company Robinhood. It's a pretty curious turn given his claim that he knew nothing of the company he founded. Now, as the FTX fallout casts a dark shadow over all cryptocurrency, joining me now in a Fox Business exclusive is the Bitcoin Foundation chairman and an early investor in Bitcoin, Brock Pierce. Brock, so good to have you with me today. We spoke right at the very beginning that this was all going down. I got your take, but I want to start off with the obvious question. What has the FTX fallout, this very public downfall of SBF, had on the price of Bitcoin and other cryptocurrencies?
Well, this has been the biggest scandal and the biggest event in our industry's history. The impact, though, is not as severe as it would have been if not for the other events that happened earlier. BlockFi, Three Arrows, the Terra Luna. So the market had already taken a pretty heavy beating before this event occurred, though it definitely took us much lower, and it's been extraordinary. And you commented on a couple of things there. One, Sam Bankman-Fried saying that he didn't have any understanding of what's going on over at Alameda, even though I think he owned something like 90% of the firm, and he's taken out loans to buy things, houses and otherwise. And then just now he got out on bail. So he decided to change instead of fighting extradition in the Bahamas, he decided to be extradited. And he said in all of his interviews leading up to that, I only have $100,000 to my name. I don't even know how I'll be able to pay my lawyers. And he somehow was able to make a $250 million bail, the largest bail in U.S. history. And the news that came out today is that we should expect to see a plea agreement. He's going to likely be pleading guilty to some set of charges, probably similar to the CEO of Alameda and one of his other co-founders sometime in the next week or so. So none of what he's told us makes any sense. I think we're all pretty skeptical.
Sure, yeah, that January 3rd arraignment next Tuesday coming up. We'll certainly be watching that closely. You know, I do want to zoom out a little bit, though, because like you said, you know, there were a number of things that happened leading up to FTX, but we've seen a number of other bankruptcy filings, right? You've got BlockFi, you had Bitcoin miner Argo. I believe they just narrowly missed filing for bankruptcy with a $100 million bailout. When we look towards 2023, do you expect to see more of that happening?
I think there's still some shoes to drop, but we've likely seen the majority of it, probably the vast majority of it already happen. And these are mostly coming from upstarts, organizations that hadn't survived what we would call a crypto winter or a market correction. We've been through these cycles repeatedly. And so these businesses either were over-levered, borrowing from each other, and that's where we're seeing this. This has really nothing to do with crypto. This is not a decentralized finance issue. This is a centralized finance issue, and something we've seen time and time again. When companies take on too much leverage, not managing counterparty risk, not marking to market correctly, not having the right governance or risk management in place, these are the events we're seeing. And I think it's very important to acknowledge that this is not a fundamental problem with decentralization, cryptocurrency technology, or blockchain. The technology itself is actually designed to mitigate these sorts of events from occurring. What's happening is we're seeing financial institutions, just like we've seen for hundreds of years, taking on too much risk, and then the customers or the little people being the ones that are taking on the responsibility, but without any government agency to step in and bailing it out like we saw in 2008 or 2009. This is risks taken by management and little people getting hurt.
Sure. Well, I do want to get into that regulation piece, but first, quickly, I mean, you said, we've got a course correction here. Some equity analysts are saying that Bitcoin could drop over another 50%. We just had it on the screen there. It's hovering about 16,500. I mean, what's your perspective?
It's certainly possible. I don't think it's likely. I think that right now the big news we're seeing is about DCG, Genesis, and Grayscale. The Forbes list just came out with their new numbers showing how the top crypto billionaires have lost $132 billion of net worth, one of the biggest of which was Barry Silbert, which they've marked up at his net worth at zero. I don't think that's likely the case, but that's another major event. If that were to implode for some reason, or if margin calls started to hit the MicroStrategies, doesn't look likely. Michael Saylor just bought another $45 million worth of Bitcoin in the last 24 hours. But if another major organization were to implode or file for bankruptcy, I think we would probably see the market come down. The type of event that would need to happen for Bitcoin to drop by another 50% in the short term would be a black swan event that I don't think any of us are forecasting, but most of us didn't see FTX coming. So it would take a major event that none of us see on the horizon, but that doesn't mean it's not out there looming.
Sure, certainly none of the investors and celebrities saw FTX coming, so you make a good point. We'll have to get into the regulation piece next time. Thank you so much for joining us today, Brock. We really appreciate your insight.